2024 is flying by and the third quarter results are in from the Toronto Real Estate Board. In this market update, we're going to cover those third quarter results, the number of transactions, average sale price, and I'll also give you an overview going back to the year 2000 and correlate that with what's happened with the rapid rise in interest rates and what may happen now that rates are falling. You don't want to miss this video. If you're new to my channel, please like and subscribe. And here we go. Let's jump right into the stats. All right, so we're going to jump into the volume of transactions measured by sales across the Toronto Real Estate Board. This graph is going from the year 2000 to 2024, again, end of the third quarter, so September 30th, 2024. And, back 24 years ago, in the end of year 2000, there was just a shy of 60,000 sales. And we saw a steady increase all the way up to 2016, 2017. And then there was changes to mortgage qualification. The stress test was introduced. We saw a big dip in activity the following years, and then the run up into 2020, 2021. And then we saw the big drop off when mortgage rates went from record lows to, I think, the fastest increase we've seen in recent history for sure. So a 45%, almost 46% drop in volume of sales from 2021 to 2022. And then we saw the further decline continuing into 2024. So we'll see when this starts to turn around. Right now, at the end of the third quarter of this year, we're sitting shy of just 52,000 sales. And the long-term average you can see here is just over 84,000. So well below the average since the year 2000. And we've seen mortgage rates starting to decline rapidly now. So I wouldn't be surprised if we do start seeing an uptick in the rate of sales month over month heading into 2025, into the spring market of 2025, especially because the Bank of Canada is expected to further cut interest rates over the next few months. So that's a little history of the sales, where we're at year to date, end of September. What about price? So again, we see a similar kind of run up here from the year 2000. If you can believe it, the average price on the Toronto Real Estate Board MLS sales back in 2000 was just over $200,000. We peaked in 2021 at $1.162 million. And then we've seen the drop off kind of level out, it seems, heading into the year and a half at about 1.1 million. Now, these are averages. There's areas that have dropped significantly more, but on average right now, we're only seeing about a 4% average price drop across all home types on the Toronto Real Estate Board. So not a huge drop off. Again, there are areas where we've seen properties drop 20, 30% from their peak pricing. There are areas where we actually see some modest price growth happening now. I think the long-term trend here remains consistent. If we were going to plan out this chart for the next 24 years, I suspect rates will go up, rates will go down, but with the growth of the economy and the population, the average home is likely going to continue to increase over time. When we talk about the sales year over year, so we're zooming in now, we're looking at over the last 24 years. Now we want to get a sense of what's happening over the last year and a half or so. So we're going to look at the 2023 to 2024 sales. The orange line here are the total number of sales for 2024 year to date. And the blue line is 2023. So 2023 had a run up. January is a seasonally low month. There's a pickup in the number of sales into the spring market, March, April, May, June. Drop off typically for the summer. And then we pick up back up into the fall market. However, with the rising rate environment in 2023, we just saw this blue line continuing to diminish. You didn't see the uptick in sales that we typically have seen historically coming out of the summer into September and October. And so 2023 actually finished with 65, almost 66,000 sales. Year to date in 2024, we're just shy of 52,000 sales, and you've got November, December to go. So more or less, it looks like this trend line is going to stay maybe a little bit higher than 2023, but we had a much slower spring market. You can see here this gap here in May, April, May, June. Sales look fairly consistent. The real interesting thing to see at the end of the fourth quarter will to see if this orange line is trending back up, flat, or heading down as well. We will expect a drop off anyway for seasonality, so we'll continue to track that as well. But not a huge change year over year. If anything, sales look like they're down overall just because we had a much quieter spring market this year versus last year. All right, so in terms of price, what's been happening in price? Well, not a whole lot. 0.04% price decrease on average at the end of the third quarter of this year versus last year. These trend lines, the orange and blue line, almost look identical, mirroring each other pretty much dollar for dollar. You can see the average price in 2023 versus the average price year to date, end of third quarter 2024, almost identical. So prices are holding despite what you may hear in the news. And again, these are average prices across the entire Toronto Real Estate Board. There are neighborhoods where this chart looks a lot different, where we've seen more price declines than what's represented here. But on average, prices seem to be holding in the residential market. As I've discussed already, there are some areas that are outperforming others, some areas that have seen more significant drawbacks than others. So let's dive into these stats and break it down even further. What I want to do here is look at the 416 area, so the Toronto proper area, you can see here on the map. And then let's look at all what I'm going to call the 905 area. So that's going to include Peel region, York region, Durham region, the outlying areas, Halton region, and we'll call that the 905. And I further want to segment what we're going to look at into two categories, especially for areas like Toronto, parts of York region, and Durham and Peel. We want to look at the low-rise market. These are your detached houses, your semi-detached houses, townhouses, and then we've got the high-rise market. So these are your condo buildings, apartment buildings, and whatnot. So let's dive in now into some more specific stats. And if you're in one of these neighborhoods and want to get really, really laser focused onto what's going on in your specific neighborhood inside Toronto, York, Durham, Peel, let me know, shoot me a message, and we can dive into your specific neighborhood, whether it be low-rise or high-rise, and see what's going on. So starting off with the low-rise 416 market. These are the detached, semi-detached townhouses, freehold properties in the city of Toronto. The total number of sales in 2023 was around 11,400. So far in 2024, we're at just over 9,100. So we're seeing an actual year-over-year increase of about 7% in the total number of sales. We should actually see a higher number of sales complete in 2024 to 2023. There's certainly a lot more listings on the market than there were a year ago. So we'll continue to see more sales. Again, with the declining interest rate environment, I think sales are really going to start to move and pick up, and we may even see some price action change as well. But the trend line here, you can see it's very similar coming into the fall market, but as of September, we start to see this kind of trajectory increasing, and we'll have a lot more data when we get into October and November, whether this line continues to head upwards ending the year or levels out. It does typically drop off anyway into November, December for seasonality, and then picks up again heading into the spring. So we'll continue to watch that. The average price in the low-rise market, we already covered this for the entire average of the Toronto Real Estate Board, but the Toronto area is a big portion of that. And you can see here price is pretty much almost exactly the same year over year. Modest 0.4% increase on the average. So the average price for low-rise properties in the 416 is just shy of 1.5 million. And last year, 2023, it was just around the same mark there. So not a huge change, as you can see here. Prices are holding. So people who have been waiting for a bigger correction, at least in the low-rise Toronto market, I don't see anything else changing. It hasn't changed much for all of 2023 to 2024. Interest rates are dropping. That's going to make the amount people can borrow and affordability increase slightly. So I don't expect prices to drop any further in this segment. I do think we may even see some uptick. Again, rate drops have been fast and are expected to continue. So that's actually going to bump up pricing. Also, there's been government programs for the amount of down payment and qualification that first-time buyers can get. So there's some changes that are increasing basically insured mortgage financing from $1 million up to $1.5 million. Moving on to the 905 low-rise market. So again, this is outside Toronto proper. These are the number of sales comparing 2023 to 2024. And you can see here pretty much sales have been down for the year. That's the orange line. But now they're trending higher, at least as of the end of September, than in 2023. 35,000 sales approximately in 2023. We're at 28,000 here. I think this is probably going to end up pretty close to where we were in 2023. So the market again holding steady on the low-rise market in the 905. And the price action in the 905 low-rise market almost down 2% year over year. 2023, the average price was just over 1.2 million, and it's dropped under that 1.2 million mark to 1.18. Not a huge decrease year over year. Again, interesting to note, there's a small uptick forming here at the end of September in price growth. There was a huge drop off for seasonality as well in 2023, but also just in terms of where the market was at. So we'll see what happens. The next quarter is going to be a very good predictor of how we're going to enter into 2025 based on where we end up in the newer low rate interest environment. So now let's move to the high-rise market, and we're going to talk about the condos. I don't know if anyone's been driving around. If you're not from some of these other areas, I would let's say along Highway 7 in York region, parts of Durham region. Mississauga obviously has got its huge condo boom, which has been well underway for years now. But the high-rise market in terms of sales is pretty much consistent year over year. There's been some fluctuations. It's slightly down again, 2%. Total sales in 2023, 6,380. We're just shy of 5,000 so far in 2024. And looks like the trend line is moving exactly in tandem. So holding its own, which is pretty much the story of what we're seeing in the stats in end of this quarter, is that pricing and sales are pretty much holding consistently to 2023. And something will give eventually. It's either going to continue to trend down in terms of price and increase listings, or we're going to see listings start getting absorbed, possibly with some price growth. Because of the interest rate environment changing, I think that it works in favor of the market getting slightly heated again. I'm not talking about anything close to what we had in 2020, 2021, but relative to where we've been the last 2 years, it could be positive. The other thing to watch, though, is economic factors, GDP growth, real wages. If the economy is hurting, unemployment rises, it doesn't matter what interest rates are exactly, that's going to affect people who they're losing jobs or finding it difficult to get high-paying jobs in some parts of the GTA. Pricing is down on the high-rise market in the 905s, down about 4%. So the average price now is sitting around $649,000. So this is your average condo, for example, in the 905 region at $649,000. Last year finished off at $664,000. So yeah, there's a slight decrease there, 4%. Is not insignificant. We'll continue to watch to see if this continues to drop. It may very well take some time, and prices may need to come down further in this segment before we see it level off. You can see the drop here in pricing coming into the fall, rather significant as well. Now let's go to the total number of sales in Toronto's condo market. So Toronto's obviously got the most number of condo units. There's a flood of inventory on the market right now. Things are sitting, properties are taking longer to sell. There's a whole bunch of new construction completions coming to market. There was just a report that said basically about 40,000 units between pre-construction units coming to completion and the current resale market or MLS market. And the absorption rate would take years and years to clear out that 40,000. So definitely a glut of inventory in the Toronto high-rise market. Having said that, sales are pretty consistent to last year. We're pretty much following the same type of trend line. Definitely a decrease here over the spring and summer months. We may finish off slightly under the total number of sales of 2023. But again, I'm very curious to see with the declining interest rate environment and another few months left to go in the year, 2-3 months, where we end up. I think we're going to be close to this 12,000 mark. We could be maybe around 11,000. We'll see what happens, but not a whole lot of change in the number of sales, at least year to date as of the end of September. So before we get to pricing on the high-rise market for the 416, let's look at the active listings in the high-rise market. And this is what I was just speaking about. So 2022 now is the blue line here. These are active listings. So we ended the year here with about 2,300 active listings at the end of 2022. In 2023, we ended the year with over 3,000 active listings. So that's about a 33% increase year over year. And that's the buildup of inventory I've been discussing in the previous slide. We've now got more resale condos sitting on the market at the end of 2023. Moving into 2024, we've seen another almost 35% increase in active listings. So 2022, we're up 33% active listings to just over 3,000. Then we're up another 34% from the end of 2023, or I should say September 2023 to September 2024. So now we're just over 6,000 active listings. So ending 2022 at 2,287, and as of the end of September, we're over 6,000 active listings in the high-rise market. So we've definitely seen the buildup of inventory of condos for sale, and this is going to take quite a while till some of these units get absorbed into the market. Again, with interest rates declining and affordability, and even though there's been announcements in the change of newcomers and immigration, the GTA is still going to be able to absorb these units for some end users. Investors may come back now if the metrics make sense. That's going to take time. And then there's a whole flood of new condo completions in the 416 area that's not reflected here in this graph. So when those come to market, that's even going to bump up the amount of inventory on the resale market. This is probably the segment I would think is going to experience the most volatility, and there still could be quite a ways to go. Now let's see what the impact has been on pricing in the 416 high-rise market. So you can see here the average price at the end of 2023 was 736 and change, and the average price is now 733. So prices have actually held up fairly well considering how much more inventory there is in the market. I think it's been very sticky. I think people who need to sell their condos have had to sell them, but most people are holding on to them. Many investors are keeping these condos, renewing mortgages with cash negative positions, cash flow negative positions. So it seems to have been holding on so far. The question is, how much longer can it hold on, and can people who own these condos weather the storm as interest rates decline and units get absorbed, while facing the fact that there is a ton of inventory in the market and there's more to come? I do think, by the way, looking forward, a lot of builders have stopped or put projects on hold. So we'll be well supplied in the 416 condo market for 2025 and 2026. But when it comes to 2027, 2028, with projects that would normally be starting now or selling now from a pre-construction perspective, we may see a huge shortage in the 416 area come 2027, 2028 and beyond, because these things take 3, 4, 5 years from start to finish, if not longer in some cases. All right, so on that note, what is driving all this growth in the future? It really has to do with Canada's population. And because we're here focused right now on the Toronto area, we've updated the Big Picture Real Estate Report, which talks about how Canada's population growth is impacting real estate in Southern Ontario, not just the Toronto area, but the entire Southern Ontario region, the 416, the 905. If you haven't checked out this report, send me a message. You can download it for free online. We go over the number of immigration statistics happening, the changes happening, transportation infrastructure, where the next hotspot's going to be for growth in Southern Ontario. You definitely want to check this out if you're looking to understand what's driving Canada's and specifically the GTA's real estate market. You can shoot me an email. I'd love to chat with you. Talk soon.